Hello everyone, it's Mark Pruitt with Strategic Estate Planning Services, and this is the Mid-Year Market Update. You know, it's hard to believe that we're already halfway through 2024. Now, the Federal Reserve has already signaled that they plan to lower the Fed fund rate a quarter of a point this year, and they also announced the plan to lower rates 4 times in 2025 at a quarter of a point each time. So we are close to the beginning of seeing the air slowly come out of the balloon, so to speak, in regards to interest rates coming down. My opinion is that once these rates come down 1%, you may see the real estate market begin to heat up in certain areas of the nation that have a housing shortage. And the Dallas-Fort Worth area is one of those areas as people come here for work and a more tax-friendly state such as no state tax. You know, housing is a large percentage of the nation's economy as it employs so many different trades to build residential and commercial properties. You know, so people ask, Mark, is the recession still possible? My answer is, well, we always have to be watchful for those signs, but a recession doesn't just come out of thin air. Now, we don't have time today to go through all of the areas, but I do believe the economy is softening because of pesky inflation and higher interest rates. Food seems to be the number one area that I hear clients talk about overall, whether it's eating out or just going to the grocery store. People are working, and the proof of that is the adjusted unemployment claims chart that comes out weekly. And if you look, the line is almost flat with very little movement. And this means people are working and there are no escalating trends and layoffs. As people get laid off, they will normally file for unemployment benefits, and that makes this line move upward as they file for those claims. The chart above is the one that shows the initial or projected claims, and then the one we're showing you is the actual insured claims. So if we can combine a strong workforce with lower interest rates, then I would say we will still have an economy that can move forward overall. And when that happens, people spend, businesses spend, profits can occur, and when companies make profits, that makes the markets go up. The first half of the year has been good, and the question I still get weekly is, how do you think the rest of the year will go since we are in an election year? Well, we expect no straight line up, but I still expect a positive year overall. There are certainly no guarantees, but if you take a look at the following chart from First Trust, it lines out the history of what has occurred during an election year since the S&P 500 began. The observation in all of this data is there have been 23 elections since the S&P 500 began, and in those election years, 19 of the 23 years, or 83%, provided positive performance. So while there are no guarantees of a positive performance in an election year, I can say that historically, the S&P 500 index performance during presidential election years has historically provided positive gains for the stock market. As always, if you have questions, please feel free to call us at 1-800-381-8870. Also, feel free to send this market update to your friends and family. We would be honored to help them if needed. God bless you, God bless America, and your entire family. Happy Independence Day, and remember, when it comes to money, it pays to be strategic.